Hope you're having a great morning. We're going to do the daily financial news, and we haven't talked about the Chinese real estate market in quite a while. It seems that, back in 2018, 2019, for those OGs on the channel, we were talking about Evergrande and the collapse in China. Well, I just got a report that the Chinese real estate market has collapsed, destroyed, crashed, and lost Chinese households $18 trillion. And if you know anything about the Chinese real estate market, they could be on the cusp of another disaster this year. It looks like they have yet to find the bottom. Now let's put $18 trillion in context. The entire stock market cap or worth in China is roughly $14 trillion. So at 18 trillion, it is larger and significantly larger than the stock market. On top of that, if you go back and look at what the U.S. households lost in the GFC, the global financial crisis, U.S. households, it is estimated, lost $11 trillion. So again, the Chinese real estate collapse is happening. It is frankly not over, and probably not over by a long shot. And their economy is in the pooper because of what is going on. You got to remember, we talked about this a bunch 4 years ago, but if you don't remember, the average Chinese consumer, right? They hold their wealth, their retirement in real estate. That was what they had done for a long time. And that has obviously been dented, destroyed. They don't have consumer confidence. You have consumers scrambling, and they are likely years away from rebuilding that. And that's why you're seeing the Chinese economy in such a bad spot. So again, $18 trillion. We lost $11 trillion in the GFC, and their entire stock market is only worth $14 trillion. So some pretty bad stuff. Read an interesting article about retirement and regrets that most have at retirement age. And I just want you to think about this. There's a lot of us out there who are early in our careers, and maybe we're thinking that retirement is a long way off. Here's a few things to think about. Number one, not saving enough. Less than 25%, so less than 1 in 4, believe they can sustain their lifestyle, their comfortable lifestyle, in retirement. No bueno. The median cash, so you line them all up, and the one in the middle, they have $71,000 saved. Some of you out there likely have more than $71,000 saved right now, which if you do, congratulations. On top of that, the median home equity is 114 grand. So if you slap those two together, and you give them some grace and you round up, it looks like you have 200 grand put away. So you're talking 200 grand, access to 200 grand, and likely Social Security, and that's it. That, folks, that's not enough. That's not enough. Please take this as a wake-up call, right? If you aren't thinking about the future and putting some stuff away or creating a plan, as you know, our plan was to get 4 rental properties. And by the time we retired, those would have been paid off. Those 4 rental properties were they were basically going to be our savings, right? And that's what we had intended. So get a plan. Number 2, retiring with too much debt. Greater than 50% have identified debt that they collected while working as a huge issue. And this one's frightening. At least it is for me. 70% have credit card debt. Please do yourself a favor. Don't retire with credit card debt. Credit card debt at 20, 21, 24, whatever it is today, not a good thing. I do want to thank you for watching the Daily Financial News. You guys are all rock stars. Thank you for the comments. I can see them there, but I need your help. We only had one new subscriber yesterday. So if you watch the Daily Financial News and you're not a subscriber, do me a favor, hit that subscribe button. I know it is a vanity metric, but still, it's not very encouraging to see all the work we do and only get one new subscriber, right? Usually we average 20 to 25, but the last couple of days have been really bad. We got 1 yesterday and 4 the day before. So the algorithm is not showing us any love, I guess. So help me out there. Looks like Goldman Sachs has changed their tune, at least a little bit. Goldman Sachs was calling for $3,000 gold in 2025. They now moved that back to 2026. They expect the Fed to only make 3 cuts in 2025, where before they were calling for 4. Again, I think they're going to be 0 or 1. Danielle DiMartino Booth thinks there's going to be 5. So, hey, let's have some fun. Let's get the comment section going. Let me know how many cuts you think they will be in 2025. We're going to call the range 0 to 6. So pick a number between 0 and 6 and let me know what you think in the comments, how many cuts will be out there. We got some Fed speak. Again, remember, folks, Fed speak is going to be very important the next couple of weeks. We got a bunch from Fed President Cook. I'll go through them, no particular order. First, it will be appropriate to cut to the neutral rate over time. Remember, what we're trying to figure out when we hear Fed speak is who is a hawk and who is a dove. Number 2, labor market has cooled in the past year. Okay. Labor market is better balanced and is not a source of inflation. Remember, one of the things that we have been watching for is a wage inflation spiral, right? We want to avoid that as that could lead to a bad outcome, that spiral effect. Continuing on, there's 2 more. The Fed can proceed more cautiously in cutting rates. And then finally, looking at private credit and artificial intelligence, aka AI, as financial stability risks. So when I look at this, Fed President Cook is basically saying we are not cutting soon. We are going to collect a lot more information, although they have put out a call for where the black swan might be. Black swan, again, according to what Cook said today or yesterday, might be in the private credit, or we could have an AI black swan. Not sure what that would be. Maybe it would be a substantial decline in asset values. Maybe it would be a significant increase in unemployment. Seems a little early, but maybe. So again, very interesting to see. Folks, did you know we are 40 days away from our Vegas event? A lot of you have told me you were coming, but you haven't bought your tickets left. I want you to know this. We are now down to 81 tickets. We had just under 100 a few days ago. They are starting to sell quicker and quicker. Remember, once we get to 300, it is over. We are not going above that number. Looks like we have 12 VIP tickets. 12 VIP tickets. Remember, VIP tickets get you 6 hours of networking with all the speakers in a very intimate space. There will only be you and the speakers there. But again, general admission, just as good. Lots of stuff you're going to get for general admission, asking questions. 6 meals I'm feeding everybody this year. Just seems like the right thing to do. So hopefully we will see you in Vegas, 40 days away. We did get some inflation data out of Germany. It actually shows that inflation may be reaccelerating. Last month, Germany had 2.4, was expected to rise to 2.6, actually came in at 2.9. So again, inflation, we are watching to see if it reaccelerates. This is obviously a concern we have here in the United States. We do get our inflation reading next week on CPI, so we will be looking for that. We did get ISM service PMI, and we got ISM manufacturing on Friday. I saved those both for today. So again, we can look at services and manufacturing. Services PMI last was 58.5. It was expected to match that. Actually came in weaker, came in at 56.8. Remember, when we talk about these numbers, in my mind, we're basically looking at, hey, is it above or below 50? And second, what is the month-to-month trend? So it is above 50, which means it is expanding, but it is worse than last month. So again, a trend. We'll be watching that to see if it continues next month. Now, ISM Manufacturing, remember the same story. We're looking at 50, and what is the trend? Last month was 48.4. It was expected to get worse to 48.2. It actually came in better than expected, came in at 49.3. So again, below 50, but better than expected. I want to give a shout out to two brand new school members. Thank you for joining. Thank you for being a part of it. I want to thank Stephen and James for joining our school platform. That was amazing. Don't know if you guys saw the videos from yesterday, but I had an awesome conversation with Andrew. Andrew is a school member. He has 75 units in Southern California, with many of those in LA County. Shout out Andrew for being a brave soul. I've said many times I would not invest in LA County, just given all of the rules. But Andrew is clearly making it work. Again, remember, this is 75 units over a 15-year career. This is not an overnight success. But Andrew, as he shared in the story, is in growth phase. He looks to move his equity around. He has done many successful burrs and the like. So, again, if you want to talk about California real estate, or you want to talk about how a mortgage broker, Andrew is a mortgage broker, has taken his day job and really fed his real estate career, please take a look at that. Lots of deals. And we even talked about a 12-unit creative finance deal that he is working on. And then we did hear from Dan Bird yesterday. He's talking about the Santa Claus rally. Remember, this is one of the things that we track to see what the year might be like. The Santa Claus rally actually came in negative, came in at negative 0.5 or negative 0.5%. For context, last year was negative 1%. So again, we will be looking at that. It was interesting to look at the rally because Dan had some pretty clear thoughts on what is coming, and you should take a look at that. I do want to highlight a very important video that will go live at 10 a.m. this morning. The one and only and great Jason Pritchard. Jason Pritchard is a investor in California who I put on my personal Mount Rushmore. He is the best of the best. He talks about how he made 2024 his best year yet. Yes, folks, we talk about the numbers. We talk about what's going on. And he shares how he learned from the painful 2023 early in 22, the $100,000 losses, and how the pivot actually made 2024 his best year yet. He will be at the ORAT event with his lovely wife, Jen. Jen, thank you for helping me put it all together. Much, much appreciated. So again, please take a listen to that Jason video at 10, Dan and Andrew from yesterday. Again, folks, thank you for being here. All of you are so nice. Let me look at the comments, see what's what. Yep, you guys are amazing. Let's see what's in the comment section. You guys are awesome. All right, we got people calling for 2 cuts, 1 or 2, 1 at most, 0. Oh, all-nighter, you and I together on that one. Jen's got 2, Steven 2. I like it. I have a range right now. I got 0 to 2. I guess if I were to pick, I just feel 0 could be possible. I like 0 because I called that early years ago. Remember, folks, as we wrap this up, I want you to have an amazing day. Join school, become part of the accountability groups. The ladies of ORAT are killing it. Real estate agents and brokers killing it. Just the standard accountability groups. We had one this morning, I think, that kicked off at 6 a.m. You guys are animals. I think we had one yesterday on Sunday. We also have the newest one, out-of-state investing, is rocking and rolling. That goes off on Friday. Folks, take care of yourself. Have an amazing day. Join school, and please buy your tickets to Vegas. We're down to, I forgot what I said, 81 tickets, 12 in VIP. I hope to see you there. Bring your books. I'll autograph them, take some pictures. Bring your questions. If you're coming to Vegas, please remember, I'm doing this for you. Prepare ahead of time. Go look at the agenda. Go get the list of speakers and get your questions ready, because you will be able to line up in a microphone and ask all of them questions. And believe me, if you have a question, I guarantee you somebody in the audience has that question also. Take care of yourself. Have an amazing day. Peace.